Welcome, and coming to you live from Europe. No, I'm lying, actually, we're still in Joburg. But we're talking about Europe, the ongoing European debt crisis. From an investment point of view, is it all still doom and gloom? Joining me in the studio from Absa Investments is an old friend of the television station, Chris Gilmour. I didn't mean old as in age, I just meant as in you've been here so many times. You're almost a permanent fixture at CNBC Africa. Welcome, Chris, nice to have you with us.
Thank you very much, Jeremy.
Is it all still doom and gloom?
It depends. It depends on which part of Europe we're talking about. If you're talking about places like Greece and Spain and Italy, not so much Ireland, they seem to have kind of got out of a lot of it, but they've still got a long way to go. Portugal, yeah, it's still all gloom and doom. Go to Germany, those oaks have been having a great time.
Yeah.
And, you know, the weaker euro, it's not, I wouldn't say the euro is weak, but it has been weaker because of a lot of this, has helped the Germans with their export program, so they're actually doing very, very well out of it. They're laughing all the way at the bank, in fact.
Why is it then that if the euro is in such an embattled position, we're not seeing that coming through against the rand?
Well, in fact, what's happening is the rand has, until very recently, until a week or so ago, it had been a bit weaker, and it was tracking what was going on with the euro. There's no real rhyme nor reason to this, you know. This is just something that's kind of dictated by money market traders. Euro goes weak, we go weak. Euro goes stronger, we go stronger. Because if you think about it, we're classified as being an emerging market, for rightly or wrongly. Whereas the euro itself is the second biggest traded currency in the world after the US dollar. And yet, you know, we seem to be tied into that for some obscure reason.
It's just, I know we were going to talk about Europe, but these conversations all go all over the place. It's just mind-boggling to me that you've got the UK, which is struggling. You've got vast swathes of Europe, which are struggling as well. And yet the rand against the pound and the euro just seems to be sort of sitting at that 10 and 12 rand level. I would have expected that to have pulled right back.
Well, in fact, if you look at the pound, and that's a good example because the pound isn't obviously, it's different to the euro, and it's out there on its own. If you go back 3 or 4 years ago, the rand against the pound was about 14, 15. So in fact, the rand has strengthened markedly against the pound. Sterling has been pretty weak against a lot of currencies until fairly recently. But what has happened with the UK is that a lot of investors and speculators alike have taken the view that what they're doing in the UK is actually the right thing. You know, in terms of their austerity programs, in terms of cutting back on public expenditure, this type of thing, it seemed to be doing the right thing. So whatever your political viewpoint doesn't really matter. The markets seem to quite like it, and sterling has largely stabilized, but they did get a big benefit a few years ago from a weaker currency.
Okay, before we get on to investing as such in Europe, let's have a look at some of the situations that have developed there. You say the UK is on the right track. It'll take a few years for them to come back, I would imagine. Where's Greece at the moment? Are they still up the creek without an oar?
It's still looking very, very messy, Jeremy. Look, in the sense that they've got a lifeline thrown to them in terms of a bailout.
I wouldn't call that a lifeline. I'd call it an entire ship thrown at them, to be honest, not even a lifeboat.
Yeah. Look, I mean, you have to go back a few years to see where they came from and where they are today. One of the reasons they're in such a mess is that if you go back a decade or so ago, they were coming into the greater Europe, the Eurozone. But in fact, what they did with the connivance of certain US investment banks was they managed to kid the people on, the Eurocrats in Brussels, that in fact their fiscal situation was an awful lot better than it was. In fact, it was bad already. And it got progressively worse as government, companies and individuals took advantage of much, much lower interest rates than they'd been used to previously and geared up and bought just about everything under the sun. Coupled with that, the authorities there deemed it a good idea to let people retire at very early ages, late 40s, early 50s, and have a good time. Now, unfortunately, they got caught with the 2008 global financial crisis and the backwash from that. So as a result, the Greeks are now paying a very, very heavy price for having lived catastrophically beyond their means. Until very recently, their total debt as a percentage of GDP was about 180%. It appears to have come down a bit since then, but it's still unmanageable. There's no way in this world, over any kind of reasonable time frame, that they're ever going to be able to repay that back. And what has happened is that many of the banks, the European banks and other banks that have lent to the Greeks, they've taken what is referred to colloquially as a haircut, a 53.5% haircut. In other words, they're going to get less than half of the money back that they lent, you know?
Okay.
And it could have been worse. You know, you think, well, how much better could it have been? It could have been a 100% haircut. They could have got nothing back. So, you know, they're having to pay money back on a monthly basis, and every month, you know, we're going to have the same kind of scenes outside the Parliament building in Athens, because you roll it over, but they still don't have. At the same time, the actual economy is getting driven into the ground because of these austerity measures. I mean, we're getting salaries cut in half. That's quite the norm. But because they're straitjacketed by being part of the euro, they're not able to devalue their currency, export more, get more people to come in as tourists, for example. So they have to live with a straitjacket. So, and frankly, I see it as being a messy situation that will take many, many years to get out of.
But I mean, the reality in Greece, and we'll move on to some of the other areas in a moment, but the reality in Greece is nobody's paying taxes. I mean, I was speaking the other day to an old varsity friend of mine, George Mazarakis, whose mother had a property in Greece, and he's inherited that. And he's fixed it up a bit, and he got a letter saying that he owes so much in tax, and he paid his tax. And his whole family in Greece was up in arms. Why you pay the tax? He said, because I got a letter. It said I owe the tax. You don't pay tax. Why you pay tax? Nobody pay tax.
Yeah.
And that's part of the problem.
Yeah, it's a cultural thing. And I think what I've described in the past decade or so, I think more and more people got used to that kind of way of life. They just didn't pay their taxes. So, you know, perhaps they could take a leaf out of Pravin Gordhan's book on how to run a really good, efficient tax system.
Yeah.
You apply that, I think the chaps would be paying an awful lot more tax. You see, when you've got to a situation where such a small percentage of the population is actually paying tax, trying to identify the taxpayers, you know, and constructing a database is the devil's own job. But they're going to have to do it.
Spain.
Yeah.
What's going to happen
Spain's a different prospect altogether, you know. When they joined the EU, getting on for 20 years ago now, there were a lot of skeptics around. They say, well, you know, what has Spain got? A bit of tourism, this and that. In fact, they haven't. They've got an awful lot more than that. There's far more to Spain than there is to Greece, for example. And I'm not being derogatory towards the Greeks. I'm just looking at it from a pure factual perspective. They've got a great banking system. They've got a lot of big industrial companies. Interesting, today I saw in the news that one of their big petroleum companies, Repsol, is now involved in a big dialogue with the Argentinians who want to expropriate their Argentinian company without any recompense. But it gives you an indication of the fact that Spain's got a well-developed industrial infrastructure. What happened with them, unfortunately, during last decade is that they spent an awful lot of money on construction. They had this massive construction boom in many of the tourist areas. And again, they got caught with their pants down in the 2008 global financial crisis. They geared up to build these properties. The housing market, the residential market, the hotel market all collapsed in a heap. And as a result, the banks, in many instances, got left holding a lot of these relatively, and I put it I underline that, relatively worthless properties. So that's got to play its way out through the system. So there's been a bit of a contagion into the banking sector in Greece. In Spain. Unemployment in Spain today is running on an average about 25%. It's very similar to what it is in South Africa.
I was going to say, almost the same as it
very
is
similar.
here.
But even more acutely, in that 18 to 25 year age range, it's over 50%, as it is in Greece.
Yeah.
So unemployment is of nightmare proportions in Spain, as it is in Greece. And if that isn't addressed in a reasonably short period of time, the political consequences, in my opinion, could be absolutely horrendous.
Well, I mean, you look at us, and we're in about the same situation. So, little word of warning there to the politicians, if you don't mind taking a little word of warning. Portugal?
Portugal, it's a much, much smaller economy. It's bigger than Greece, but a lot smaller than Spain. And I think a lot of the kind of problems that we've discussed, not to the same extent in Portugal. You know, they've got a big tourist industry. But I think it's more of an agrarian type society than Spain. And but again, they've lived beyond their means. They're going to have to cut back. We haven't heard as much about Portugal as we have about.
It's
Spain
sort of lurking.
Yeah, it's there, and unfortunately, their banks have taken a bit of a pounding. Their economy's taken a pounding. They're going to have this whole austerity as well.
It's the same with Italy, isn't it?
Italy it could be the big kahuna, and by that what I mean is that although their debt to GDP isn't perhaps as big as Greece's, only about 120, 130%.
Only?
Yeah.
Yes.
The physical quantum of the debt in Italy at $1.9 trillion US. It's just unbelievable.
Trillion.
That's
How many
huge.
noughts is that?
I think it's 12.
I can't even.
12, yeah.
I can't even see the number.
Yeah, it's massive. It's mind-boggling.
Yeah.
And to be able to repay that debt again over any kind of reasonable time frame is horrendous. Now, coming back to the political thing, if you look at Greece and Spain, it's not so long ago, we're talking about the 1970s, that you had fascist dictatorships there. Greece had a military junta, a right-wing military junta, and Spain had dear old General Franco, who'd ruled for 40 years. The Italians have had, and I could be wrong here, I think it's 61 governments since the end of the Second World War.
It's ridiculous.
So political instability, that's why I say could be a feature if we're not careful.
Okay, we've now got this sort of overview, the general. Before we go to the break, are there any other countries that you want to highlight that may be a problem in the Eurozone?
In the Eurozone particularly, Ireland was a problem. I think it seems to be getting better. Property values, again, it was more of a property situation with Ireland, have fallen by massive figures. And there are certain people around who reckon maybe now's the time to go and have a look at buying physical property in Ireland, for example. But they seem to have largely taken their medicine. Again, it'll take a few years before it comes right, but I think they are doing the right things in Ireland.
Okay, we've got the overview now. Now what we need to do in the next half of the show is let's start cherry picking. Let's start seeing where we should be possibly looking at making investments and in what sort of form. Are you up for that?
Yep, let's go for it.
Chris Gilmour, my guest in the studio this evening. We're looking at the Eurozone and possible investments there. While there's trouble around, maybe a good time to get in and make some money in the long term.